has estimated a valuation of 9.9 to 11.5 lakh crore rupees. To understand the methodology of this valuation, and also of course to understand what is their view of LIC, given the fact that we've been talking about capital allocation of LIC's funds as well. I have with me Rajeev, Shah, Managing Director and CEO of RBSA Advisors LLP. Mr. Shah, appreciate you joining us, on ET. Now, what we're talking about is, of course, India's largest life insurance company. Now, we're not sure when the IPO will come out, but you've pegged the entire value of the company to be at 9.9 to 11.5 lakh crore rupees. Just roughly tell us, how have you come to that calculation?
Thank you, Mubina, for having me on the show. I completely agree. LIC is not just a company, it's an industry in itself. If all of us and most of us have for us and most of the Indians, LIC is sort of synonymous with the insurance industry. And even if we compare the figures, out of 37 lakh crores of asset under management in the insurance industry, more than 90%, that is 33 lakh crores, is managed by LIC. So it is not just an industry. What we call, when we were analyzing this, we were thinking that this is Saudi Aramco of India. It is as large as that. And typically, not just the industry dominance, but if you look at LIC as a company or insurance as an industry, is a very, very different industry than traditional industries. In insurance industry, you have premiums coming in, but the expense, which is the claims, can happen after a very, very long time. So the gap between the revenue which is recognized in terms of insurance premiums and the cost which is to be incurred for servicing that premium can be significant. While it leads to a very, very high risk in the industry because you're in the business of taking risk. But if the quality of underwriting is not so good, the company could be exposed to a certain very, very undefined risks. At the same time, the float that you have with you for this period helps you creating sufficient value. So LIC as such is a different kind of industry. And when we were looking at analyzing LIC, we were trying to draw parallels from global insurance company, not just the Indian peers. So when we look at global peers, companies like China Insurance or Ping An Insurance, which are in similar domains in China, like Ping An and China Insurance, they are larger than LIC. So Ping An is 2.5 times, or more than 2.5 times, almost 3 times the size of LIC. And China Life is also almost 20% larger than LIC. And when we were benchmarking LIC, we were looking at the penetration in China and penetration in India and what kind of multiples it could have. Taking it further, even if we look at the kind of in India, insurance remains largely under-penetrated. There are challenges in terms of how much LIC will be able to capitalize on it, because you have all the private insurance companies which are fairly aggressive. There's the HDFC Lives, the ICICI Pru's of the world, which are also listed. So when we were looking at its valuation, we benchmarked at various multiples. The traditional, as I said, the traditional benchmarking in valuation for insurance industry doesn't work. When we want to look at insurance as an industry, you try to look at the embedded value in that company or the value of new business. But unfortunately, LIC does not disclose any of such metrics. So what we were looking at is the asset under management. What is the multiple to asset under management? And when we look at global peers, something in China, they were 20 to 22% of the value of that company is 20 to 22% of the asset under management. So that is the benchmark that we had to follow. In Western democracies, the valuation multiples are much smaller, much lower than this. However, LIC is an exception. You have a much longer growth opportunity available. And considering that, if you look at the Indian peers, the SBI Life, HDFC Life, and the ICICI Pru's of the world, they are trading at an asset under management multiple varying from 40% to 90%. So there is a significant divergence in Indian insurance industry.
Right. You know what, Mr. Shah, that's where I would like to draw in that difference, that comparison. Because see, when we compare LIC to, your global insurance players, to even private insurance players for that matter, firstly, look, LIC, for better or for worse, does have political interference in the sense that the government does ask LIC that, look, you know what, I want you to buy certain assets, certain shares in PSUs, etc. And, with LIC's big investments in the equity markets and the thrashing that we've seen in the equity markets because of COVID, LIC's investments as well have suffered bloody blows. So don't you think because of that reason as well, the multiple that we are assigning, in your case you've assigned 30 to 35% of the AUM, will any which ways because of that reason be lesser compared to the multiple being assigned to, global insurance players or private insurance players?
I completely agree with you. So far as Indian insurance players are considered, their multiples are much higher than what we have assigned to LIC, and precisely for these reasons. If you look at the challenges with LIC, it is not just the PSU tag, which by definition pushes a lower valuation multiple, but it is also the perception in the market that LIC is considered the investor of last resort. Case in point being IDBI Bank and several other bailouts where LIC is sort of acts as an investor of last resort. So there is a lot of, if I say, government nudging or interference in terms of the investment decisions. Also, LIC is more social or run with a lot of social objectives. So it is whether profitability is the only parameter, I would sense it is not. The structure and nature of LIC is very different. So it may be very, very difficult to benchmark it with private insurances. And I agree with you that the multiples that LIC would command would be lower. And even in our analysis, we have taken a substantially lower multiple. Now, in coming to the various complexities, it is not just LIC is also governed by LIC Act, wherein it has a sovereign guarantee of every insurance policy written as a sovereign guarantee, which is not the case with other insurance companies. At the same time, you have challenges in terms of capital allocation. Now, whether LIC is defined, given in that act, you have to follow that act and do the capital allocation accordingly. Now, sir, LIC would have its own dynamics, right, in the sense that...
So I just wanted to understand that, what are the risks to this valuations, in terms of LIC? What do you think can change if this lockdown is extended, if, there is a big sort of a drawdown on workforce? Do you think valuations for LIC could also come down?
Certainly, without fail. In fact, if you look at last 2 months, valuation of not just, in India or across the world for all companies, and especially insurance companies, have collapsed anywhere between 35 to 40%. In Indian insurance industry, they've collapsed by an average of 32% or thereabouts. When we look at global insurance companies in Western world, they have collapsed even higher than that, even to some extent more than 40-50%. Now, this is because of the increased perception of the risk, a lot of claims that were unanticipated. So COVID-19 is a sort of a black swan event for all the insurance companies. And the thinking which was existing in January vis-a-vis the thinking which is existing in March is significantly different. So without doubt, I am completely in agreement with you that the valuation of the whole insurance as an industry would suffer. But at the same time, in India, insurance penetration is very, very minimal. This event, whenever we come out of COVID-19, would bring an enhanced focus on the insurance business, would bring people would genuinely want to do insurance, not just because of tax saving, but they would genuinely treat it as a risk mitigation mechanism. And there will be, in my personal view, a lot of focus on people wanting to take insurance, not just because they want to save tax, but for the real fact of that. So there are two events playing out. One is, of course, right now, for the next 6 months. This would be a
Okay,
positive.
you know what, Mr. Sharma, we take your point. We've got the point that you're trying to make, that insurance penetration is low, and with this whole COVID outbreak, it's certainly something that will get individuals to sit up and take notice. Hopefully penetration will improve, and that would be a positive, obviously, for LIC. Thank you so much, Mr. Shah, for sharing those insightful details on LIC. We will take a